Hi, everybody. How are you? Hope you're doing well. So, today we're going to talk about how to finance a multi unit. But before I do that, I'm going to talk about why a multi unit is beneficial. Majority of people start out with single family homes, reason being that single family homes are generally less expensive to get into as opposed to a multifamily. But gradually, people begin to move on to multifamilies. And a multifamily is anything more than one unit. So multifamily, it could be a two unit, a duplex. It could be a 3 unit. It could be a 4 unit. This is the multifamily. This is the residential multifamily. So even having a something with 2 units, that's considered a multifamily. So you got your 2 unit, your 3 unit, your 4 unit. That's multifamily, and that is in the residential sector. So anything 5 units or higher is considered commercial multifamily. And people own like hundreds and thousands of units. So people buy according to their interests. Some decide that they only want 10 units and now they're done. Other people would like hundreds and thousands of units. So again, anything over 1 unit is considered a multifamily. So, how to finance a multifamily? I'm going to give you 7 ways to finance a multifamily. When you are ready, um, I read that millions of people have been laid off, and there is a way to get property, even if you're laid off. So, I'm going to talk about that. So, that is called the DSCR loan, the debt service coverage ratio loan. And the thing with that is that the interest rate is on the high end. Those interest rates are around 7 to 9%. They base it on the property. How much income is the property going to make as opposed to how much income are you making? So they do want to have evidence that you have some money in your account from somewhere, like some kind of retirement account, something. So they do want evidence that you do have money in some account somewhere. But that is the DSCR loan, and you can get that even if you are unemployed at the moment. They say millions of people have been laid off, and they expect that to continue. So that is one way, the DSCR loan. If you're ready, just keep that in mind. If you're not ready at the time, that's fine also. You could just use it for future purposes. So a second way to finance a multi-unit is a HELOC, home equity line of credit, and that is for people who already own property. So what you do is you pull the equity out of your current property that you already own and you use that on down payment. You use that as down payment for the next property. So home equity loan of credit is not accruing any interest until you get ready to use it. It's just sitting there. So that is a second way to finance a multi-unit. A third way to finance a multi-unit is the hard money loan. Now, the hard money loan, that is the absolute last result because the interest rate is so high. Their interest rates are around 11, 10, 10, 11, and 12% hard money loans. But the hard money loans, they do give you the money to buy the property and the money to fix it up. They're making money off of you because their interest rates is so high, like 10 to 12%. And so what you do is you're making interest only payments back to them. The thing with hard money loans is that these are short term. So eventually you do have to refinance that loan out. And so as you know, right now it's not really a good time to be refinancing loans um, because of the high rates. But there are people out here that are doing it anyway. I mean, especially if you are into short-term rentals, you are not really going to see a negative effect with that because you have so many people in your property. Maybe you're doing short-term rental, or maybe you're renting by the room. So there are some people that are still out here refinancing regardless of the rates. But that's something to keep in mind for yourself. Just knowing that the interest rates are very high, just to know that in advance, and to figure out if that is something that you um, would be interested in doing. With hard money loans, they are also looking at the property itself. What money will the property itself be making? So that is the third option, the hard money loans. Number 4, there is private money. Private money is raising money from other individuals. Um, Perhaps you could get 10K from different people, and then you would have the down payment for the multi-unit. Um, Generally, these are people you know. Sometimes they're people that you don't know. They're just interested in real estate. Um, they have confidence that you know what you're doing. Perhaps you could give them a little presentation of the building that you're looking at, of the revenue it expects to make. And what they get out of it is they get a small percentage, and you can negotiate that. So they're putting money in, but they do have the expectation that they're going to get money out of it. So they're doing it for a reason, just so you know that. So that's private money. That's the fourth option. Fifth option is an equity partner. Equity partner, you go in as partners, and they actually own a percentage, and you are splitting this rental income. So that is if you decide that you want to work with someone. Um, Generally, it has to be someone that you trust, and everything that you do, it needs to be in writing. Make sure you get everything in writing. That is the equity partner route if you choose to work with someone. Another option is seller financing. Seller financing, generally that property is it's paid in full by the owner, but the owner is benefiting because you're paying them a monthly payment. So instead of that monthly payment going to the bank, that monthly payment is going to the owner. And the benefit of seller financing is that you can negotiate the interest. The interest can be whatever you want it to be. It can be very, very tiny. So you're also negotiating what this monthly payment is going to be also. So that is the benefit of seller financing. Also, you don't have to get a loan from anyone. You don't have to go through all of these issues of going to multiple lenders and multiple banks and getting denied. You don't need a loan. That's how that benefits you with seller financing. Also, you can pay a small interest rate. You can pay a reasonable monthly payment, and all of that is negotiable between you and the owner. So that is seller financing. What they're getting out of it is they're getting a monthly payment that comes to them, and they're also getting tax benefits. Sometimes you may find someone who is willing to do it because they would like to help you out. But generally, they're doing it because they're getting tax benefits from it, and they're getting a monthly payment that they would like to see every month. So that is a number 6 option. Number 7 option is subject to. Now, if you would like to know the details on subject to, go ahead and email me. There are pros and cons when it comes to subject to. Subject to is good at this time because of the high interest rates, the high inflation rates. But there are pros to this and there are cons to this, and you should know both. So you email me if you're interested, because I would like to see if you're interested. That is subject to. So those are 7 ways to finance your multi-unit. There are a couple of other ways that I have not mentioned. We will go into that at a future time. But if you like this podcast, do me a favor and hit the like button. Also, if you're not a subscriber, hit the subscribe button and notification bell next to it so that you won't miss an episode. It also helps the channel to grow. And the bigger the channel, the bigger the guests. So guests like big channels. So if you would like to see bigger guests, go ahead and subscribe. There are a lot of humble, kind multimillionaires who have been on the show, even though the channel is not big. So I love people who are down to earth and humble, and I am meeting them and they come on. But hit subscribe so that the channel can grow bigger and so that I can reach more people. All right. Also, leave a comment and let me know your thoughts. Again, before you leave, hit that like button. Thank you for watching. Have a good rest of your day.